Do you still hold this view that, private credit can play a role in high yield Sukuk?
I think it can hold a fundamental role within it. And by its very nature, a lot of what you can do, and here I say can, obviously, because private credit is bespoke and you can do whatever you want with it, but the ability to create bespoke financing that's very tailored to the opportunity, where risk is very explicitly shared, is actually extremely Sharia compliant. To me, I look at a lot of what we do, particularly within the asset-backed lending space, where you actually have a true sale of assets, a real identification of the purpose that this financing is going towards, can achieve a much closer level of Sharia compliance than I think is possible. Some of the criticism that the public Sukuk market has at times is, where disclosures may be a little bit weaker, or where packages may not be as clear, or where generally there's some lack of transparency. And it is a little bit difficult when you have a very commoditized market to achieve the same level, right? And I think here there's obviously, a lot of levels of interpretation, but I think you can generally see that actually, but the nature of Sukuk, if it's going to be a truly risk-sharing product, is ultimately for it to be a hybrid between equity and traditionally what we think of fixed income. And you really can create that within private credit. We very largely look at, kind of the way we think of our fund as one that is based on, opportunities of lending specifically against pool of assets and secured. But a lot of times where we have, not just very strong participation in the underlying assets, but a lot of times you have participation in the upside of the company, whether that through some equity link trigger, right? And that serves multiple purposes. Is obviously one, it creates very strong alignment, which is something that you want. So you want to be aligned with the company that you do. The traditional view of the lender, simply being the merchant of Venice, is not one that's appropriate, in my opinion, for the type of lending and the companies that we do. You do want to partner with the company that you have, and you want to share with the risk. And similarly, there should be some sharing of the upside. But also, we're not an equity investor. So, the hybrid model really, really kind of works really well. And if you just kind of tie it back, you made a point earlier that's a very good one about value being, accretion coming down to very small companies, just kind of by the nature of capitalism. A model like this also works really well for the asset class, because, what you want is over a pool of assets that you invested in, or a pool of companies where you have small participation in a set of these, some subset of which can do extremely well. So it does a lot, I think, for product design, and I think it'll prove itself. And then I hope it just becomes a, very interesting subset of income generating assets for Sharia-compliant investors, which, as just have a very limited opportunity set in what they can invest in.
Yeah, it sounds like you're saying that private credit can, have more skin in the game if you want the company to do well, or the issuer to do well, not just look at the return that it gets.
Correct. Oh, absolutely. Oh, absolutely. It should be. And I think also the nature of the asset class and the investor being a committed longer term investor, kind of by the nature of when you give these financings, you're intended to see them through maturity, also create a very different profile than what public investments are supposed to do, right? A Sukuk that's publicly traded is intended to be traded. The investor holding it on day one is not going to be the one at maturity. What a lot of these financings would do, they would hold you to maturity. So you do kind of see a much closer relation with the company, and again, kind of just a stronger alignment.